what's going on with Bitcoin and, digital money and network-based digital money reminds me so much of the development of the internet. And there was so much skepticism back then. I mean, it's the same thing. Paul Krugman says the fax machine. I mean, just a lot of people were like, this doesn't really matter. And I was like, no, this is going to matter a lot. and it did, right?
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Lawrence Lepard, sound money advocate and fund manager, exposes the harsh realities of America's $35 trillion debt crisis and its impact on our financial future.
And I think the thing that really changed in my lifetime and in my investment experience, and I don't think the world, and I talk about this in the book, I don't think the world has really cottoned on to how important this is the value creation that takes place in network businesses.
Yeah.
Pre the internet, there weren't really that many. I mean, there were somewhat of network businesses. I mean, kind of the Yellow Pages was a little bit of a network business, or the telephone companies were a little bit of a network businesses. But network businesses are businesses that grow in value as you get more users, and you attract more users because everyone wants to use the same network. And so it's Metcalfe's law: the value grows at the square of the underlying number of users. And I mean, if classical investment theory, Graham and Dodd value investing was, you look at cash flows and PEs and you try and buy things cheap and this, that, and the other. But Graham and Dodd never encountered, or it was very rare for them to encounter businesses that grew and became as bulletproof and valuable as the network businesses. I mean, if you look at kind of the Amazons of the world, which is up like 22,000 times since inception, or Microsoft is up a couple thousand times. I mean, or Google. I mean, the amount of money and the amount of value that's created in being in the leading network as an investor is just stunning. And another thing I talk about in the book, I mean, throughout the 2000s, I made some mistakes investment-wise because I would look at Amazon, I would look at Google, and I just couldn't get there. I had classic investment training, and in Amazon's case, they were losing money. I'm like, I'm not going to buy a company that's losing money. There's no deep value there, right? Or, Google, the same thing. I was like, well, no, I never click on those ads. Why does anybody care about those ads? Well, the placement and fees and everything else, it turned out it was a really great business. And so, I'm not going to make that mistake again. Here we've got an emerging network of money that everybody in the world is going to need someday. And, we're really in the early days. And so it's like, okay, it's coming. You can just see it's coming. So you got to grab a piece of this digital Manhattan, as Saylor refers to it,
Senator Elizabeth Warren and crypto lawyer John Deaton exchanged blows over crypto policy in their first debate of the race for a seat as a United States Senator from Massachusetts. Deaton, a Republican candidate, called out Democrat rival and incumbent Warren during the October 15 debate for focusing on building an anti-crypto army instead of prioritizing other issues impacting the lower and middle class in the state. With illegal immigration bankrupting the state, with inflation pricing regular people out of the economy, why did this senator wake up one day and say with all that, "I will build an anti-crypto army," Deaton said. Warren claims she's fine with people who want to buy and sell crypto, but want to ensure the industry follows the same rules as banks and stockbrokers, namely consumer protection and counterterrorism laws. The senator also claimed that crypto is often used by terrorists, drug traffickers, and rogue notions to finance their illicit activities. Warren and Deaton agreed that traditional banking has failed many Americans. Still, Deaton said banking access hasn't been a priority for Warren, pointing to a December Senate Banking Committee hearing where Warren spoke to JP Morgan CEO Jamie Dimon and focused her questioning on crypto crime rather than banking failures. She had the CEO of JP Morgan Chase available for questioning, and they financed the largest child sex trafficking operation in history with Jeffrey Epstein, and Senator Warren didn't ask a single question. Warren hit back, saying that 90% of the funds supporting Deaton's campaign to unseat her came from the crypto industry, and they'd expect a return on investment should he make the Senate. Deaton didn't directly respond to that claim, but said he often upsets the crypto industry with controversial takes and has beefs with many crypto billionaires. Warren is defined by party. Notice its Democrats are great, Republicans are bad. I got news for you, Senator. All of you suck in Congress. All of you. The face-off with Warren came after Deaton won the Republican nomination in the Massachusetts primary election on September 4. Warren has a 22.5% lead on Deaton based on 6 polls, the Hill's 2024 elections data shows. Deaton is bidding to break an 11-year streak during which Democrats have controlled both Massachusetts seats in the U.S. Senate.
Gold mining is a terrible business, absolutely terrible business. But
these guys aren't operators, right? They're risk takers.
It's like getting to it's like threading a needle. I mean, there are world-class geologists, and the patterns. I mean, there's a lot of pattern recognition in gold mining. I mean, and gold discovery. And we've got a lot more tools than we used to have. We can fly aeromag, we can fly, we do LiDAR surveys. There's all kinds of things that they can do to say, hey, based on the way this geology looks, there ought to be gold here. And then they poke a hole and find out, yep, we're right, there is, or no, we were wrong, there isn't. But there's a lot of slip between the cup and the lip. And to get from there might be some gold here to gold coming out the door is a lot of time, a lot of money, and a lot of risk. Which is why in the gold mining space, what I tend to focus on more than, I've got some drill stories. There are 3 categories. There are the producers, developers, and drill stories. And the producers are the safest place to be because they have a mine that's operating, that's throwing out positive cash flow. So, they don't necessarily need to go sell stock to dilute you on a daily basis. The developers who have a deposit but haven't built the mine, or the drill stories who just think they have some good-looking rocks that'll turn into a deposit, those guys, there's risk all over the place. And many of them fail. It's like you've really got to pick them very, very carefully. Mm-hmm. Because the Bitcoin mining business is a pretty tough business too. It's commodity, it's cutthroat, it's based on having low cost, and we've got some very nice companies that are incredibly low cost. So in the portfolio, and then they've also done private companies that are working around the edges and doing working on a piece of the the Bitcoin infrastructure and solution. So, and I would say that they're probably following. The one thing I add is, my view when I was in the venture capital business, kind of my number one test of whether I wanted to invest in something, it just took away a lot of risk. Was is there revenue and are the dogs eating the food? Is what I like to say, and. Because there are a million people who come up and say, well, give me a bunch of money and I'll build this, I'll create this great food, the dogs will eat it. But, frankly, between, that dream and having dogs eating it is a long way with a lot of risk. When you've got a business that's actually working, it can be trivial in size. It can be very, very small. But if you've got a proven business model that's working and the issue is really just to turn the crank, add money, then you've taken a lot of the risk out of that kind of investing. And so, and that's what these guys are doing. That's what David and James are doing. Not to say we haven't done a few raw startups, but in generally speaking, we're finding things that work and are likely to get much, much bigger as Bitcoin penetrates the world, which you and I both know it's in the process of doing. So they're doing a really good job, and they raise, it's a closed fund. They raised the first fund. They'll probably be out raising another one sometime in a year or so. But they're doing a great job.
Bitcoin's increases in dominance have historically been bad news for altcoins, and BTC gained 2.5% on the day while altcoins traded mostly flat or dropped. Still, some traders think Bitcoin's dominance will be short-lived and will soon crash, which they claim will open the market for altcoins to rise. In an October 16X post, ICT crypto founder Benjamin Cowan predicted that Bitcoin's dominance would top out at 60%, while crypto investor Coach K Crypto claimed Bitcoin's dominance had peaked for this cycle, telling his 129,000X followers that Bitcoin needs to rip before anything else can happen. Soon enough, there's going to be a breakdown in Bitcoin dominance, they said. This will lead to meme coins and other major altcoins getting a taste. Analyst Modas El-Said said on October 14 that Bitcoin's dominance is about to crash hard and predicted the start of altcoin season. Ethereum is historically one of the first assets to move when Bitcoin's dominance declines, but the Ethereum to Bitcoin ratio, a conversion rate of BTC to Ethereum, is close to its lowest level since April 2021, falling below 0.039 again this week according to TradingView. Since hitting a fresh all-time high of $73,738 in March, Bitcoin has been trading mostly sideways. but it's now approaching a key psychological level. Its 2021 high of $69,000, which it held for about 3 years. Institutional investors are still keen on BTC, with the 11 U.S. spot exchange-traded funds seeing net inflows of $371 million for October 15. The products have seen more than $1.1 billion in aggregate inflows over the past 3 trading days, according to Farsight investors. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.